Investors brace for their latest update on the health of the AI boom. Welcome to Market Insight. I'm Thomas Warner. Trading on Wall Street's major markets is notably muted ahead of Nvidia's Q2 results due out tomorrow. Anything less than another remarkable quarter from the AI darling will shake things up very quickly indeed. So what should we be expecting? Joining me now to give his take is Ross Gerber, co-founder of wealth and investment managers Gerber Kawasaki. Welcome, Ross. People may know that Nvidia makes up around 9% of your Gerber Kawasaki ETF. We're forecasting Q2 revenue of almost $28.7 billion for Nvidia. That's twice higher than last year. Is that what you're expecting?
Yeah, that is what I'm expecting. And, once again, I think Nvidia's numbers are off the charts for a company of its size, and to be doubling revenue with 70% margins is incredible by any standard. So I do think the market expectations might be elevated, and so on the short term we'll see some volatility in the stock. But I think for long-term investors, the story is more than intact, and we'll have verification of that, moving through earnings and into their guidance. So we're very bullish on Nvidia long term.
Well, you've mentioned the margins there. They have been under a little bit of pressure from all that capacity expansion that they've been doing. So outside of margins and revenues, what do you think are the figures that are going to be the most influential in terms of the market's reaction tomorrow?
I think what most people are kind of wanting to hear is the product roadmap with future products. There has been some rumors about delays and really the transition past H100 chips. So I think that's what everybody's kind of looking for. We know there's demand into 2025 for the new chips, the Blackwell chips. So, I think it's really, is everything on track? Is, chip, production normalized? And if that's verified, I think the market will be happy with the results, and we'll see less volatility. But, once again, it wouldn't surprise me to see some sort of selling in the stock just because the expectations are ridiculously high.
Well, Ross, over the last couple of months, we've seen some incredibly ridiculous reactions, in fact, to even seemingly innocuous bits of data. Tomorrow's results from Nvidia, you couldn't even really class them as being at all innocuous. So we could be set for quite a strong reaction from the market, couldn't we?
Well, it's very possible too. Once again, Nvidia's valuation is extremely high, and it does take into account a lot of the growth that they've seen. But this is the beginning of the AI revolution, not the middle or the end. So investors certainly need to own this stock, and they might get that verification tomorrow that really says, hey, this story's intact, and I need to own the stock if I don't own the stock. And that is what could push it higher. But Nvidia is a well-owned company. So once again, I'm trying to temper people's expectations because the valuations have gone up so much in the last year.
Well, your ETF is quite exposed to AI at the moment. You've got several of those mega caps
Yes.
in the basket there. What's your plan if we do see some unexpected signs of cooling from Nvidia tomorrow?
Well, we'll add to any weakness in the chip sector, in particular Nvidia, AMD, or Broadcom, which are our three chip holdings. And any opportunity we have on pullbacks, we're looking to enter the market. So we have plenty of capital at our firm. Investors are flush with cash, and knowing that rates are going lower, people want to put cash to work. But with valuations so high, it really gives investors little opportunity. So any pullback in markets for us that represents any value in the AI sector, we're going to take a look at buying those stocks, because once again, we think this is the beginning of the trend, not the middle or the end.
Let's move on to one of the other Magnificent Seven now, Ross. Tesla, you told Yahoo Finance that you've sold more than half your holding, made a few headlines in the process. So what's your issue with the stock?
Well, mostly we started selling, now it's about 7 or 8 months ago, when the tweets became sort of racist and anti-Semitic, and we felt that Elon Musk's reputation among Tesla buyers was dropping substantially, to the point now where he's one of the most hated people on Earth, and let alone in California, unfortunately. And so it's really cast a pall on selling cars for Tesla, because their core demographic is liberal, and it is not being picked up by a conservative demographic or Trump supporters. So with the sort of current position of Elon being a direct, massive supporter of Donald Trump, it's really turned off whatever buyers that were left in California and in Europe. Pretty much are not considering Teslas anymore. And so this is going to substantially and materially affect the company's sales over the short and long term. And so, this is a big issue when you're in the car selling business and you build technology that can change the world. It's only works if people want to buy your products. So if people don't want to buy your products, it doesn't matter what you invent. And I think Elon's going to be learning this. Secondly, we think that full self-driving has fallen behind now, Waymo, and the advancements in full self-driving are still not satisfactory to be able to be a robo-taxi and to build a robot. So a lot of the things Tesla's talking about, we're very concerned on their ability to deliver that anytime soon. So Tesla's got a lot of issues in front of them, and most of them are self-created, and so they're solvable issues, but it will take a change in sort of the way that Tesla's being run.
That was Ross Gerber expressing some of his personal opinions there. Thank you, Ross, co-founder of wealth and investment managers Gerber Kawasaki. And that is Market Insight. Don't forget, you can watch more videos on Reuters.com.